Hello and welcome to this lesson, how to backtest and forward test trading strategy. This lesson consists of following sections. Trading strategy backtesting essentials, where I will overview trading strategy backtesting in general. In the next section, I will overview PineScript backtesting with a strategy tester tool. After that, we are going to study PineScript forward testing with the market replay tool. And finally, in the last section, I will overview the strategy backtesting and forward testing. So let's begin. Backtesting in general is a quantitative method used by traders to evaluate the historical performance of a trading strategy. It involves applying indicator or strategy logic to historical market data to simulate how they would have performed in the past. Backtesting helps traders assess the viability, performance, and effectiveness of their strategies before implementing them in live markets. Here are the key steps involved in trading strategy backtesting. First step is selection of a trading strategy. So we choose a specific trading strategy that we want to test. The strategy could be based on technical analysis, fundamental analysis, or combination of both. So we selected a strategy, and in the next step, we need to collect the data. We need to gather and prepare historical market data for the period that we want to test, including price movements, trading volumes, and any other relevant information. The quality and accuracy of the historical data are crucial for the reliability of backtesting results. In the third step, we set up strategy parameters or indicator parameters. We define the parameters of a trading strategy or indicator, including entry and exit criteria, stop loss levels, take profit levels, and any other relevant rules. These parameters should be based on the rules we would follow in live trading. In the fourth step is a process of simulation. We apply the chosen strategy and parameters to the historical data, simulating the execution of trades over the selected time period. Each trade is executed based on the rules of the strategy, considering factors such as slippage and transaction costs. And fifth step is performance analysis. So in this step, we evaluate the performance of the strategy by analyzing key metrics such as profitability, risk-adjusted returns, maximum drawdown, and other performance indicators. This analysis helps traders understand how the strategy would have performed in the past. Now, let's study trading strategy backtesting benefits. Trading strategy backtesting has following benefits. First, historical performance assessment. What it means is traders can assess how well their strategies would have performed in different market conditions over a specified time period. Second benefit, parameter optimization. Backtesting allows traders to fine-tune the parameters of their strategies for better performance. This process is sometimes referred to as optimization. And the third step is strategy refinement. It's based on results of backtesting. Traders can refine and improve their strategy to enhance overall performance. I must say, however, it is important to note that backtesting has limitations. Past performance does not guarantee future results, and there are challenges in accurately simulating real market conditions. Traders should be aware of potential biases and exercise caution when applying backtested results to live trading. Additionally, over-optimization, or so-called curve fitting, is a risk. And strategies should be robust enough, they should have a cushion to adapt to changing market conditions. Now let's go back to TradingView platform. Backtesting on TradingView platform is the process of executing PineScript code, such as PineScript strategy, indicator, or library, on historical data. So let's now review and practice the process of backtesting on TradingView platform with the strategy tester. Here we have super charts open on a certain market. Now let's go on to Pine Editor by clicking on Pine Editor button. We have here opened a certain strategy. Now in order to backtest the strategy, we need to add this strategy to the chart. We click Add on Chart. Once we have added the strategy, in this case, to the chart, the strategy has been executed on each bar of the loaded chart, and it was backtested that way. So currently the strategy is fully backtested on all available data on this market, and we can see in the strategy tester the results of backtesting this strategy. Now, what we can do is that we can evaluate and assess this strategy by analyzing the strategy performance metrics, such as net profit, total closed trades, percent profitable, profit factor, max drawdown, and all other strategy metrics that we have. We have also additional metrics available in performance summary tab of the strategy tester, where we have more parameters to assess backtested strategy. So by backtesting our strategy, we can assess the strategy, we can check how that strategy is viable and how it is acceptable for us to trade. As a next step, we can start changing certain parameters of this strategy. We can change, for example, moving average parameter of this strategy, and we can change type of moving average. And when we change the parameters of the strategy performance changes, the metrics of the strategy performance changes, and we can assess the strategy with different parameters in order to see how strategy would have performed on historical data with different parameters. And by doing so, we can better assess the strategy and try to see how the strategy can work on different parameters, and that way we can analyze strategy better and assess the strategy for the selected market. Now, let's review the strategy forward testing now. So what is a forward testing? We have just studied the strategy backtesting. Now let's study the strategy forward testing. Forward testing is also known as a paper trading or simulator trading, and it's a method used by traders to test trading strategy in real-time market conditions without risking actual money. It involves executing trades based on historical data as if they are happening in real time. This allows traders to assess the effectiveness of their strategies and evaluate how well they would have performed in the past. So what is the difference between backtesting and forward testing? So the difference is, first, the amount of the market data fed to the trading strategy and how detailed the data is. And the second, the trading strategy is not optimized on forward tested data. It just tested on this data. In backtesting strategy is given usually 1 or 4 data points for each bar, close price or close open high low bar values. In this case, the strategy has no information about intrabar price behavior, and this distances away the backtesting process from the real market conditions. However, in forward testing, the strategy is provided by intrabar data, such as trades, ticks with price and volumes data. And that brings the forward testing closer to the real-time market conditions. So the process of forward testing typically involves the following steps. First, selection of trading strategy, where we choose specific trading strategies that we want to test. Next, data collection. We gather and prepare historical market data relevant to the time period that we want to test. This data should include price movements, trading volumes, and any other relevant indicators. Third, simulated trading. We use the historical data to execute trades according to the rules of your chosen strategy. So, trading in this simulation as if we had traded with real money, including setting stop loss and take profit levels. And the fourth step, analysis. After the forward testing period is complete, we analyze the results to assess the strategy performance. Forward testing provides several advantages. First, risk-free environment. Since no real money is at stake, traders can experiment with different strategies without the fear of financial loss. Second, realistic market conditions. So they are more realistic compared to backtesting. Forward testing allows traders to experience how their strategies would have performed in real market conditions, considering slippage, transaction costs, and other factors. And third advantage, learning and improvement. Traders can learn from the outcomes of their forward testing and make necessary adjustments to their strategies to enhance performance. So we need to keep in mind that while forward testing can provide valuable insights, past performance is not indicative of future results. Therefore, even after successful forward testing, it is crucial to be cautious when transitioning to live trading, and to use proper risk management practices. On TradingView platform, we have replay market feature that allows us to forward test strategies. So let's review how it works. So to access the replay market feature, we click on the replay button on the top of this supercharged screen. After we click on that, we can click on this button, jump to, and after that we can select the start date when we want to start replaying market data. Let's, for example, select this date. We click. After that, the chart is reloaded, and chart is going to start replaying market from the date that we have selected. After that, we can click on play, and the market replay has started replaying the market. We can change the speed of replay by selecting this button. Then we can make it slower, or we can make it faster if we need to. During this process, the trading strategy is fed with the bar with intrabar data such as ticks, trades, and volume. Therefore, this process of testing is called forward testing, and it is process of testing is much closer to real-time trading, because the data that is fed to the strategy is close to real-time trading environment. It has intrabar data, and each bar has trades or ticks and volume. So it is called forward testing, and because we are not supposed to optimize our trading strategy during forward testing, we optimize if we need to optimize and change parameter for the trading strategy during backtest, and then after we done backtesting, we feed the strategy with the new market data from market replay during forward testing, and that way we analyze how our strategy would have performed with the new unknown data to our strategy. Now, let's see how we can properly evaluate and backtest and see the performance metrics during the forward testing. So let's say, for example, we want to test the currently loaded trading strategy starting from somewhere from the beginning of May. In order to do that, we can see that currently we have in our strategy tester the performance of back testing of this strategy is loaded, and therefore it kind of interferes with the forward testing that we want to get the metrics from. So in order to have only metrics in our strategy tester only related to forward testing, we need to set the start date of our trading strategy. Our trading strategy has start date parameters and end date parameters. So let's quickly review how this strategy has programmed this parameter, so we can use this tactic in order to apply it to any other strategies that we need. This start date and end date parameters help us to backtest and forward test our strategies only on a selected period of time. We can see that we have integer parameter set for the start date, such as start day, start month, start year, and 3 parameters set for the end date. It's end day, end month, and end year. So After that, when these parameters are set within the strategy, we calculate using timestamp function the numeric value of the time start and time end, and we're going to use this value in our time comparing logic in our custom function in order to identify when this strategy is allowed to trade or not, right? So now let's take a look at the custom function that is called isTimeEnabled. This function isTimeEnabled is going to return bool value indicating whether current time on the current bar is the bar where strategy is allowed to trade or not. In this function, it's just simply comparing the current bar time to the time start and time end. And if current bar time within allowed range between start date and end date of this strategy, then our strategy is allowed to trade. Now let's see how isTimeEnabled function is used in our trading logic. Here in this switch function, we set our trade signal boolean variable. Is long, is short, is exit long, and is exit short. And we can see that we have added additional condition into this trading logic whenever we set either of these trading signals. And in order any of these trading signals to be set, isTimeEnabled function must return true value, meaning strategy will be able to set any of those signals and will be able to trade only in allowed range to trade. So we reviewed how we can set start date and end date parameters in our strategy in order to restrict the period when we want to trade our strategy. Now let's return to the strategy tester. Let's say we want to forward test our strategy starting from somewhere from May 1st, right? So therefore we want to have in our strategy tester only the metrics collected from May 1st, right? So in order to do that, we go and click on the strategy parameters gear button, and we set here the year and the month, May, from May 1st. So now we can see that strategy has started trading from May 1st, right? And we can double check that by going on list of trades, and we can see that the strategy starts trading later than May 1st, right? From June 22nd, there was a very first trade. Okay, so now we're good here. Now let's start replaying market data. In market replay tool, we jump to the same date as we set in our strategy, which is May 1st. Because we want to start collecting performance metrics from May 1st. Now, as you see, we have currently no trades in our strategy tester, right? So, and now when we start replaying market, we're gonna see the performance in the performance of a strategy in the strategy tester that is going to reflect all the performance that is collected only during forward testing. So it completed forward testing from May 1st to the end of the chart, and we now can analyze the performance metrics that was collected only during forward testing. So using this method, where when you set the strategy trading period that is beginning from a certain date and you set in the market replay tool the start trading date from the same date, you can collect performance metrics in the strategy tester only during forward tested period. Now, summarizing this lesson, we have studied how to backtest PineScript trading strategy with the strategy tester tool. Also, we have studied how to forward test PineScript trading strategy with the market replay tool. Additionally, we became aware of certain limitations of both back and forward testing. Backtesting and forward testing are crucial steps in the development and evaluation of a trading strategy. They serve complementary roles in assessing the viability, robustness, and real-world effectiveness of a trading approach. This is the end of the lesson, and I will see you in the next one.